Monday morning, folks, and welcome to the brand new episode of FINMET Mondays. We had a very interesting last week where markets went very similar to how we had forecasted it to be, Sunil. We said that there might be a correction if we see the Iran Israel conflict tensions abating a little bit, and that's exactly what happened. Two other developments also were the GDP numbers from US and the PC inflation data. So those were also key important points. How would you summarize the entire outlook for last week for gold in the broader sense?
Yeah, I think I would say confusing still. I'm talking about the market. The market still remains a bit confused. There's a lot of discussion about what is or who is behind this rally. And the data we saw coming in last week actually contradicted a lot of the theories about who's buying. So,
Yeah.
firstly, the China Gold Association reported consumption numbers for gold in China for the first quarter, which came in only about 5% higher than last year, which is maybe an increase of 15 tons, which is minuscule. Also, the data we're seeing from the refineries and the mints in the West and also from Australia show that their production is down as much as 75%.
Okay.
Okay, so that seems to mean it's not retail demand. And also, we saw some central bank numbers coming in, and there wasn't really a radical increase. There was some increase in India. There was some selling in Singapore. So there's not that much of an increase in official central bank holdings either, in terms of declared holdings. So I think a lot of the theories that people had saying it's China, it's central bank, it's a retail investment demand doesn't seem to be coming through. So there is continued confusion to try to figure out where was did this buy come from?
I think that's also how we see the technical charts also faring. There's a lack of direction from a near to middle term perspective of how markets are going to fare up. But let's quickly look at the outlook for the coming week. This is the US spot gold daily chart, which we went through last week as well. We saw this huge pullback of about 2.6% on on Monday, and then you saw a stabilization around this 23-22 support that we spoke of. What I think is going to be a challenge for gold bulls specifically is how do they tackle this increasing assumption that the interest rate cycle is going to get delayed considerably. The reality of that is going to strike the gold bulls a lot sooner than most people think, and that might have an effect on gold prices coming in the coming week as well. I was a little bit surprised that the PC inflation data did not already do that. You would have expected PC, which is Fed's preferred gauge of inflation, coming in higher, surprisingly, all of a sudden, would have really thrown investors and everyone into a panic mode. But that didn't happen. In fact, you saw markets still kind of taking it in their stride and registering a slight higher on Friday. So this was a little surprising. And I think as markets digest more and more of this data, we may see a retracement, a proper retracement that kind of mirrors what is happening on the fundamental and the economic side as well. So to reiterate from last week, we had this 23-22 support that I think will be tested this coming week. The events that might lead to a test could include the FOMC meet, where the Fed is going to convene and they're going to share about what their policy rate cycle is going to look like. Post 23-22, we do have an intermediate support around the 2290 area, which I've not highlighted because it's an intermediate support, but you have a major support around the 2256 region. So I would say the sentiment and the outlook is more trending towards the bearish side. Long term, we are still very much bullish, but we're currently in a very consolidation sort of phase currently in gold, wherein markets are not really getting a direction of, and not getting a trigger to register those upsides. So I think we're just going to see some sideways to downwards movement in the coming weeks. So Sunil, you're also at the silver conference in Goa, and there's been a lot of talk about the demand for silver, the deficit the global silver market is also facing. So what are some of the key observations, the key findings that you've basically come across from your interactions with people over there?
Mhm. I would say there's three points that came home to me at least. Um, One was, I think, I was quite impressed by the strength of the silver actual users market there. They had some industrials, we had some silverware people, and so it was quite interesting to see how strong um, the sort of SME manufacturing base is in India, and really some of the players are quite remarkable in terms of world-class kind of players. So that for me was quite a revelation. I think it leads on to the second point that a lot of people felt, and I agree that silver is like a poorer cousin of gold. And there's been a lot of attention given to gold and gold promotion, exports, etc. But really, it's a time to look at the silver industry because there's a lot of potential for India to do more on the world stage. Um, and so I think there's something there. There was a consensus within the community that there needs to be a concerted effort to try and lobby for better conditions for the silver industry and see how there can be incentives to promote silver production of silver products. And lastly, I think I would summarize that in terms of the feeling of the gold price, there was generally a bullish, um, sorry, the silver price. There was generally a bullish kind of sentiment. People felt that we may trade down a little bit, but $25, $26 should hold, and then we'll move up. I think the investors in silver are more long-term players. That's clearly what came out, and so they're willing to be patient. But there's generally a sentiment that they would be buying, maybe after elections, but they would be buying coming in um, at slightly lower levels, maybe around 70,000, 65,000, 70,000 levels. They will be buying coming into silver.
Interesting, interesting. Well, thanks, Sunil. Let's see how the markets play out. We'll probably even track silver going forward more closely. Thank you so much, and goodbye.